All right. This is our insurance meeting, Tuesday, June 16, 2026. Miss Ruth, could you do roll call, please?
Yes, indeed. Fausto Fabro.
Here.
Richard, Stuart Richland, absent.
No.
Bruce Dustman.
No.
Jerry, no. Tony, no. Donald Foster.
No.
No. Mike, we're removing. I'm here. Richard Handelsman, no. John Hess is here. Michael is here.
Yep.
Christie and
David.
Phil Massey and
And John and David are here.
David is
You got
here.
them. Okay.
Yeah, I didn't call them. Yeah, I
Yep,
got you.
we got you.
I got you, yeah. You can take this back.
We have the minutes from our last meeting, which was January 20th. I'll need a motion to accept these minutes.
I can't accept them, I wrote them.
I'll make a motion.
Okay.
I'll second it.
Okay. Are there any corrections to the minutes as set forth before us?
Size punctuations.
We don't care.
Can you hear okay, Phil?
Yeah, I could hear perfect.
Good.
Okay.
Okay, hearing none, the minutes will be accepted as presented.
Mhm.
I guess we don't have it. Do we have any old business?
I don't think so, no.
I don't think so, but. All right, well, we'll hold off we'll start off with the new business. So that brings you up, Phil.
Sure. Perfect. So what I figured I would do first, I know the landscaping product we're going to talk about, which is the reason we kind of called the meeting, but I'm going to talk about that last. I want to get some updates out of the way for everybody. And I like to do this around this time of year as we do each year. Now that we're, 6 months or so into the insurance program for both UCO and the master condo product, I wanted to just update you guys on a few things to keep everybody apprised of what's going on. So first thing, what Christy was just mentioning, Christy was at the main clubhouse for Senville. We are doing loss control inspections like we did back in the day. I say back in the day, 3 years ago or so with Fred and his group that flew in from Ohio. One of the advantages now of being with Gallagher is we have our own risk control people here in Florida. And so these guys are doing Senville as their very first for us. They obviously have been doing it for years, but it's the first time that we've had them on one of our accounts. So after this goes, we're going to, look at it and see how everything goes for Senville because that renewal comes up on August 1st. But we plan to be doing the same thing for UCO. So we will likely have them back out to do your facilities and stuff. So that stuff's coming down the line. But that was what was going on earlier today. And again, all good stuff, but that was mainly focused around Senville's property, which would really be like the main clubhouse and some of their other items. Other thing that I wanted to mention is just claims updates, because I feel like it's always good for you guys to have a finger on the pulse of what's going on for the Century Village West Palm Beach condo program claims as we go through the year. We actually had a pretty eventful start of the year. So in the first 3 months, so January through March, we had 5 different property claims that kind of swept the gamut of things that could happen. So we had your old-fashioned pipe burst, had a hot water heater go. We had a fire, which you guys heard about. We had a car driving into the building, and we had a sewer backup. So we had 5 different, types of claims. And why I think it's important is that we had a new carrier, in place as of January 1st. So all eyes were on them about how they would handle those claims for those associations, how the process would go. And what I can say, and Christy can add to this, is that I believe everything was done very efficiently. So not only did we get those claims, paid and closed out, but there was at least one of those claims that shouldn't have paid, that wasn't covered, and the carrier went ahead and agreed to pay it just from an optics perspective, which we would expect, right? We were doing that with American Coastal previously, and the carriers have to understand that this is it's a big master program. We're going to probably pick some stuff up that maybe is in the gray area, and they were willing to do that. No questions asked. They were on the same page, and so these were all things we vetted with them prior. But it's good to see it in action, and it actually worked, right? Had they been problematic with us or given us trouble, that would have been a bad look. And so they've done what they needed to do over these first few months, and we kind of tested them right out the gate. I mean, these claims were January, February, March, boom, boom, boom. So altogether, I think the two biggest ones were about $30,000 each, and then a few others about $10,000. Still nothing to worry about big picture, but that did occur, and it did work itself out. So that was good. We also had several general liability claims this year that have occurred. I mean, not that bad. You got to kind of go back to 2024 and 2023, which were the last two kind of bad years. We had about 400,000 in losses in those years. We've trended better here in 2025 and so far in 26. So nothing bad to look at there. We continue to monitor those claims, work behind the scenes to get them closed, and monitor the reserves. One point that I think is important to note too is the legal defense policy. That was something we recently put in place that a lot of folks weren't used to before. That policy actually came up huge for several associations, but specifically Sheffield K. And I know Christine wouldn't mind me saying this because she put a letter out that I shared with Donald and Fausto afterwards. But legal defense came into a directors and officers claim that was denied for them, that they ended up paying out legal bills before ever even filing the claim. And we were able to get the carrier to agree to go back and pay that. And so they paid all the expenses for Sheffield K. And that was something that I made it very clear. I was like, would have never happened if Sheffield K was insured on its own. That was all because it was part of the bigger picture and the bigger program. So that worked out really well. She wrote a really nice letter that I shared. So, these things are important because, any agent can come in there and, sell anything, right? But is the stuff working when we need it? And so far to date, I can say that things have gone very well so far in 26. Not that it had been bad in prior years, but it continues to be smooth, especially with the new carriers that we've introduced. So all good news on the claims front. Any questions on that, or I'll just jump into my next thing. I just figured I'd just update you guys really. Market update, just to talk about 2027. So I know we're never too early to talk about it. We're still, 6.5 months out from the big January 1st, 2027 renewal. Too early to say anything with definitiveness because, storm season still needs to play itself out. But I plan on getting our budget updates out to you guys in August, September, same as we do every year with the write-up. I don't believe anything will change between now and then, again, unless something crazy happens. My expectation is it will be a very positive renewal again in 27. So we should be looking at further decreases in budgets, improvements in terms. So there's no bad news on the outlook for the master program. I think things are working out very well, and I think we'll have another favorable renewal on that side. So I'm just giving you the heads up. I mean, obviously, I'll put this in writing and get into it here in the coming months as we do that budget analysis, but there is all good news there. So no bad news on what's coming. And, we have now the new carrier that's in place, the CARE program. And then my bet is ACIC, American Coastal, will likely want to take a stab at it again. So you'll probably see a scenario like last year where we had two different products, which gives us, kind of even more leverage than we've had in prior years. We were kind of stuck with where we were. So we have other players as well, but those two are going to be aggressive again. So all positive stuff on the outlook. So the only new thing to talk about in this meeting, that was just really the update section. The reason we scheduled this meeting, aside from just giving you guys those updates, was to talk about a new insurance product that is become available in the market in 2026 that was never available before, as far back as my 21-year career goes. And I don't know of it ever being available prior to that. But this is landscaping coverage for wind damage. So when you guys hit with a storm, it could be any storm. It could be tornadoes, hail, but most likely going to be a hurricane, right? Hurricane comes through like Wilma or something like that. You're looking at significant damage to landscaping. Trees are, down and bushes are everywhere and everything's ripped up. And you've got a tremendous amount of debris removal cost, and you have the cost of replacing said trees and landscaping. None of that's covered by any insurance program for any association anywhere in Florida. So it's typical exclusion, not something we've ever been able to kind of fill the gap for, even though we've tried in prior years to bring products like this to market. As of January 2026, I am the only agent in the state. I finally built a product that can do this for my clients. So we started bringing this to market a few months back. And I was talking to Donald about it, talking to Fausto about it. I was like, hey, let's set up a meeting here. Think for UCO. So I'm not talking about the community associations here, but for UCO's purposes, that my understanding from talking to you guys is that most of the landscaping in the areas around the community are UCO responsibility landscaping. Now, assuming that's, you guys are on the same page there, the max limit we can sell for this product is $500,000. It's the most we're able to sell for it. My bet is UCO probably has millions in landscaping. It's we're not going to be able to insure all of it, but we can insure up to 500,000 of it. And so I provided this outlined in an email to you guys, but I wanted to verbally kind of talk about and answer any questions. The cost of the premium for this is just under 40 grand. So it's about $39,411 for the year. And that would provide 500,000 of landscaping and debris removal coverage for wind damage for UCO. And I think it makes a lot of sense for a lot of reasons. But the number one reason I will tell you is that the only rating basis for what the premium is the distance to the water and the amount of limit you buy. So an associate or an account like UCO, which has massive landscaping exposure, the premium for the 500,000 in coverage would be identical to if you were a 20 home HOA looking for the same thing. So it's not rated off exposure, which makes it just so much more of a no-brainer for the big associations and the big properties, because you just have so much value. The smaller ones you can make that argument it's too expensive for and stuff, but the bigger ones that you usually makes a lot of sense. So we've sold this a lot already, as you can imagine, over the last few months, especially to the bigger communities. Heron Bay down in South Florida, they jumped all over it out the gate. So all of our larger accounts have kind of gotten on it. And we just wanted to make sure I was having the conversation with you guys, making sure you knew it was available. It is optional, not something you have to purchase or take. It's just something we do recommend. So I figured I'll pause there and you guys can hit me with kind of any questions on that. But it's a pretty simple product in what it's set out to do. And we tried to make it that way on purpose.
I saw the paperwork. That 39,000, is that for the entire year or is that for the balance of the year?
No, it's for the entire year. So the way this would run, because we're doing this in May, the reason we held off is that usually the reason you're buying it is for storm season, but it does work at any point during the year. So if we put it in place here in June, for example, on June 16th, it will run through June 16th of 2027. So it's an annual premium and it captures the entire year. So no matter what the wind issue is, it's the entire 12 months, but it will remain on this separate dates. Like when we do UCO's renewal in January, we'll know what the premium is because usually it'll be set up for the whole year anyway, but it won't come up due until June.
Okay, and the other, I don't remember what the deductible was, because I know there was
so the deductible. Correct. And I'll explain deductible and how that works for you guys too. So the deductible is 10% of whatever limit you buy. So in this case, buying 500,000 will give you a $50,000 deductible. What folks have to remember though about the $50,000 deductible only comes into play if you have a loss that's below really 550,000. If you have a large claim, like we get hit with another Wilma, and I don't know what you think that number would be, but my assumption is that it would be significant because just the cost of removing the debris will likely be a big bill. But then when you add into it, we've got, 100 trees down or whatever the number is and what the cost is of replacing those. Most associations have never done that in the past. They've never had an insurance claim for it. So they don't even really know how to tally the cost. It was just something that you guys dealt with. You didn't replace the trees. You just went on with what you could do. But with actual insurance, you're probably going to use it. And if you have, let's just say $1 million in landscaping damage, there's not a deductible because you're just getting the 500,000 limit, right? The deductible only applies when they pay an amount, you get less 50 grand. So if you had, just making up something here, but 700,000 in damage, then they're going to just give you the 500 grand. There's no $50,000 reduction. Now, if you had 250,000 in damage, they're going to pay you 200 grand, right? You're going to get minus deductible out of it. So just to make sure everybody understands how that works. So it's really there to prevent, like, let's say you have a bad storm and, like a summer storm and it knocks one big tree down. Like that's not something you're going to make a claim for because you got a $50,000 deductible. It's designed to be like a line of tornadoes that come through or a hurricane, a big event where you've got a lot that gets damaged.
Yeah, Michael.
So when you were citing this, you were talking about UCO property. So if this happens on an association property, there's a spin up, there's a significant amount of damage. Would that be covered?
No.
So what I was thinking of for the associations, and this was another one of my notes, I don't think it would make sense for us to sell this to every association because again, there's going to be very small associations there that probably have very minimal landscaping. But like as you know, for your association, that is different. So the bigger ones that are there, the ones that are hundreds of units and have significant landscape exposure, they can buy this product just like UCO's buying it. It would be on its own. And you don't have to buy the 500,000 limit. You may not need that much. You could buy 250 or 100, right? So the lower amounts you can buy, that'll be a reduced premium. But the bigger associations there would be applicable, could buy this just like UCO's buying it. So when I think of it for the condo, I think of it more in an individualized basis, not for everybody, because it's not going to make sense for the majority of people, but the bigger associations, it absolutely might.
Would that be something you want to get a quote on, just so I know to tell Jenica?
I'll pass it along to the
Okay,
association.
yeah, just let us know.
Yeah, it's easy. I mean, you let us know. It's super simple. The pricing's set. So it doesn't, you guys are more than 2.5 miles from the ocean, but less than 25. So the rate is set. And then it's just a matter of what limit you buy. So we would give you a chart, Michael, and it would show you at each limit what the premium would be. And then you can make a decision of whether you want to buy it or not. I believe you just, and I have this podcast thing I do, which we have a video on this too. You guys are more than welcome to pass around. But my personal opinion here is this has been something I've been trying to bring to market for 10 plus years because I sit as a president of several associations. I've lived this, with all my clients. You get hit with those storms, everyone calls me and it's like, hey, we've got, several $100,000 in landscaping and debris removal from the storm. Like, how do we put a claim in? And I always got to tell them, that's not covered, right? We're only covering damage to the buildings. But you guys know these buildings, it takes a lot to rip the roof off. It doesn't take a lot to blow the trees down. I mean, the trees are going to go before the building goes. And right now, there's no way to insure those items outside of this product. So I feel like this is finally solving a problem or providing a solution for, that just was not there before. No ability to insure it. Some people struggle with understanding it because they've never insured those items before. So they just don't know what it would cost them when something happens. But you just got to think of it differently because when the loss happens now, you're going to get your landscaper out there. You're going to get, your arborist or whatever, and they're going to come out and you're going to look to replace those trees. You're going to get costs for that and you're going to put that claim in. That may not be the way you've done it in the past on storms, but if you have the coverage, you're going to do that. And I think that's going to change the mindset. And then once people realize, assuming the product survives the storm season and we have this going forward, I think more and more people would want it because they're going to understand it makes a lot of sense.
We have many Royal Palms, and to replace those at our entrances, they're almost $80,000 a piece.
Yep, it doesn't take much. People think that, again, I'm not saying you guys are the most educated of the group, right? But if you just talk to the average person out there, they have no idea how expensive those palm trees are. Not only buying the palm trees that are mature, but installing them and bringing the crews in, it's expensive. Like you said, if you think of $80,000 a palm tree and you lose all that stuff in the entranceway, it's your money right there. I had one community in Sunny Isles, their landscape wall on the outside of the building is $500,000 worth of plants in just one wall. And it's like, people don't think about how expensive that stuff is. And that wall gets shredded in a storm and there's nothing they can do to prevent it. So it makes a lot of sense, more sense than I think people realize. Hopefully we never have to use it. You guys keep knocking on wood. We dodge the bullets, but if they happen, this is something that's likely just going to strike a check because I just don't feel like you're going to be under that amount. You're going to be over that amount in damage.
Anybody have any other questions about this particular insurance? Anybody on the committee or any of the vice presidents, if you want to see the potential insurance, I have a copy on my desk, so you can read it.
Yeah, and I will give you my word on this. There's no gotcha on it. Again, this is my product. So I was able to build this with London. So I made it so that it is very easy to adjust the claim to. It is basically we're going to get that statement from the landscaper. The cost of removal was, making up a number, $100,000. Then you have 13 trees and 15 bushes, whatever else, and 400,000 of that, or whatever the number is, we're going to provide that, and it's going to be pretty easy in how it's paid. There's no reason that someone's coming out to adjust the value of these things. There's no weird exclusions. I mean, it's wind is covered, and anything alive is covered. So it's pretty basic. The way we set it up was that it would actually work. I think the problem with it is that we need to get a good wind season in front of us. This product's got to make some money for the carriers to survive. So, but again, if a storm hits this year, it hits this year. It is what it is. Maybe we can't renew the product in the future, but you get paid for what happened, right? So that's just what happens when you have new products. You need to get some luck to them to make them stay. But for right now, there's no question it's going to pay.
Anything else? Committee? No? Okay,
Yep, that was it on my end.
okay. Anybody have any questions for Phil?
Yeah, I just have, Phil, on the Sheffield K payout, you said you went back and you ended up paying it out anyway.
Mhm.
Will that continue with the insurance carrier to look at things and say, all right, we could pay this out, but we can't? I mean, the same thing with the other 5 claims. You said one was paid out even though it might not have should have, you know what I'm saying?
Yeah, no, I absolutely believe it'll continue because the way we have this program designed and why I think it's just an incredible no-brainer for the associations that are there to be part of this program is you have protection of the program. So for example, for Sheffield K, if they were not part of this program, one, they wouldn't even have the coverage. So it would have just been declined and they would have moved on. But even if they had the coverage, the adjuster, when they're looking at it, it just didn't meet the qualifications to trigger the policy based on the way it was. We were able to go to them and be like, listen, we've got this much coverage with you guys, this much premium. It would really help us to get a claim that works out. We want that positive story so we can continue to have your coverage going forward. And they agreed. They wanted to be a help in that process because they felt like it made it so that the owners there and the people buying insurance, they were going to see us, you know, your agent in a better light, but see their product in a better light. And they want to continue to renew this for years to come. So they were willing to do something that they normally wouldn't. On the property insurance side, I think it's very similar in that the adjuster that we have, they're new this year. Their goal is to make it look like they're going to do as good or better than your prior carriers. And they're not going to be a problem that you guys voice to us or we see that is just not paying claims and is trying to, you know, you look at it like screwing over, right? Like, you know, these people are, you know, they've paid us collectively millions of dollars, but we're going to go ahead and deny this $10,000 claim, even though that association might have only paid about $10,000. It's the fact that, you know, holistically, we're paying this much. I don't want to see nonsense claims that really hurt that association not to pay it. We want to figure out a way to do it. Now, obviously, I can't guarantee that everything will always be covered. There's going to be stuff that gets declined, but that stuff that's close or the gray area stuff or the, you know, things, we're going to get that stuff over the finish line because that's what the program deserves when you've got this much premium and you've got this team involved. So
Yeah,
that's worked out well.
And just to
Go ahead,
say,
Kristen.
now that I've dealt with Kelsey, you remember Kelsey? You met her?
Yeah,
Kelsey and Kevin. So she's the manager of CNC. She is very efficient. Like she gets the checks out within 2 to 3 weeks, which is unheard of for claims. So so far so good. I mean, like I said, like Phil said, there was one claim that was a little questionable of, is this an insurance loss or maintenance? And she's like, you know what, I'm just going to go ahead and push it through. So she's on our side. I mean, and if you guys have anything that you want to, I can even run stuff by her that we don't have to file a claim. I can just be like remember the stitches thing where you pop the stitches and the blood went everywhere. And she's like, it's not really an insurance loss, but if it exceeds 5,000, we can try to process it. So she's there for advice too. She's really good.
well, it's a new carrier and they want
Right.
our business.
Press, yeah.
Well, exactly. And I think that we're all over them about it. When we wrote it with them, I mean, when I tell you, I try to, I'm as crazy as I can get with them at the highest levels to be like, this is our most important account. Like you cannot let us down. Like when we have an issue, you need to be there. We cannot be dealing with 3 months into the policy. I have Fausto and the committee screaming at me that people are mad at them, that claims aren't getting covered, that are questionable. That can't be what we're looking at. But of course, I can't guarantee that until we're in it, right? And
Right.
we got in it and it worked and it's working, and I have no reason to believe it would stop. So it's just part of what we do and why you have Christy there, and we are as involved as we are in this one.
Michael, you had a question?
Yeah, just going back to last year, prior to the renewals, there were discussions and also, I believe on a webinar that you guys had done regarding building electrical panel updates and requirements. Have there been any movement towards, is that required? Is that going to be? What's on the horizon that we should be aware of?
So great question. And so as of right now, another big negotiation point with the new carrier when they came on was them completely understanding in writing that many of these buildings still have the original panels, the Federal Pacific panels. They cannot deny anything that they didn't know that. They absolutely know that. So that is something that is very clear in writing, that we have documented, that they're aware of the electrical situation in a lot of those buildings. There is no requirement from them to have these things updated by a certain date. That's not out there yet. What I would tell you is that long term, I can't guarantee that at some point that won't happen. And especially as the market were to harden again, like let's say we did have a rash of hurricanes and people, started looking, the market was hardening instead of softening, you'd probably get that pushback from an underwriting perspective. So I believe long term, the best thing for the association to do is to continue to push to update the electrical panels, to replace them, because you got to think these things were built in the 60s and 70s. Like at some point, their useful life is gone. Like they need to be replaced anyway. I mean, I think it's, you got a major electrical panel for the entire building that's, 50, 60 years old. Like at some point, it needs to be replaced. So I think getting the word out and having more people get those things replaced will not only prevent, unwanted fires that could potentially hurt us from a claims perspective, but will make it a better risk to underwrite. Just like we did with our roofs. When I got there, I mean, like you've heard me say it before, like 20% of the roofs were replaced in the last 15 years. Now it's like 90%. We flipped the script on the underwriting. So it's just such a better account because of the work that each individual association did and UCO did, to get the word out for those situations, and us monitoring it, pushing it. Same thing with the buildings that are over 3 stories, or 3 stories and older and over. So I think it's the same thing. I think it's continuing to get the message out and having people do it, but there is nothing forcing them from an insurance perspective as of now, or that I expect will happen by January. I think we're in the clear for at least a little while.
Thank you.
Anybody else have any questions? Okay. I'll entertain a motion to adjourn if no one else has any other questions.
So moved.
Okay. Thank you, everybody. Thank you, Phil.
Oh, wait,
Phil.
wait, hang on.
Thank you guys very much.
We might have,
Hold on a second.
oh,
No, I want,
Sure.
it's with the Federation, so I don't know if I should address.
what is
this
this, the Wellington Federation or?
Wellington.
Yeah, go ahead and address it with Phil, that's fine.
Okay.
Sure.
This is from Ken Graff is sending, he said, is liability coverage for Federation property beyond the pools, saunas and bathrooms, specifically the fountain? And is there a current survey that you have as to our property that Wellington Federation owns? That's part
So
one.
if Wellington Federation purchases the liability insurance, it would cover anything that Wellington gets sued for. So whether it's a fountain or a pool, there's no exclusion for any property on that. So you would be, the first part of your answer is yes, it would be fully covered. The second part of that, as for lines of demarcation or whatever, we don't, but that is something that we work on the front end. So if you look at one of the big things we did several years ago was figuring out how we can make sure when a claim's reported, is it UCO? Is it Senville? Is it the community association, right? Like we're always looking to do that. So we do have some maps and things, but we will work with Donald and the team and everybody when something happens. Is it on Federation property or is it on one of the other condo association properties? Is it Senville? Is it UCO? That is something we do on every claim. But Christy, I don't know if we have anything specific to the Federation.
So
as to
Wellington
their...
Federation is the one that just signed on to add DNO workers' comp and crime. I don't know if you remember
Correct.
that, Jenica. Yeah, so.
Yeah, I saw the emails.
Yeah, so after that, I think you'll be covered fully after you add those policies, but
Okay, now, he also said that Greenbrier, which is their corporation, is comprised of officers from the building, A, B, and C, and the corporation doesn't carry its own D&O insurance. Are these offices covered under the individual buildings?
so Greenbrier has almost like a federation like Wellington.
It's not a federation.
What's it called?
It's Wellington Corp. It's Greenbrier Corp.
Greenbrier Corp. Okay, so I'll have to look into
What?
that. I'm not sure.
Yeah, I think the issue is that if each association, a board member of that association, they're fine for that association's related stuff. But if they're on another entity, like a master association, or there's another corporation where they're on a separate board with a separate FEIN, and then they get into trouble for that particular entity, that would want to have its own separate policy for it. We wouldn't want to rely on the association's D&O if it was set up that way. Now, if it was just like a club or something like that, there's things where, it's not an official corporation or something and they're not on a separate board. It's just like volunteering their time, as a board member, but for the beautification committee of something, that would be different. That would be picked up by the association D&O, but that's what I don't know for certain here on the setup.
So the way Greenbrier is set up, each building has three officers that sit on the corporate board. You have to be an officer. In other words, president, vice president, and one of the other board members sit for a board of 9. So we're all covered under directors and officers because we're all already officers. In Wellington, that's not true. They have people, the president of the building doesn't sit on any board, so he has no coverage. I think that's where his concern comes from.
So what I would like to see is your policy as compared to our insurance.
We're set up differently.
I understand that, but perhaps we can set up ours like
How do you populate your federation?
we're working on it now.
How do you become a member on the board of the federation?
Well, now we're having an election.
Okay, what does your bylaw say? That's what I'm saying.
Bylaw.
Our Greenbrier corporate bylaw says president, vice president, and one other individual from each of the buildings sits on the corporate board. So we're already, yours is completely different.
It's apples and oranges.
Right, so you can't compare us to what you have.
I understand that, but maybe we can look at the way you are.
I just told you how it's done.
I don't think we can recreate our federation.
That's what I'm saying, because I spoke to Ken about this.
Yes, we can't.
Ken,
change our bylaws.
You would have to change your bylaws to make it that each building sends a delegate or a person to represent on the federation board like we have.
Right. Okay.
You don't have that.
No.
So you can have your entire board can be non-officers of any of the buildings. It's completely different.
So if somebody gets hurt on certain properties, and you really don't know right now the delineation, would the individual building be responsible or would the federation? Since you don't know exactly the delineation at this point.
So what's going to happen is if someone gets hurt, it's usually how we find out about it as a lawsuit comes in, right? So you get the Morgan & Morgans of the world, and they're going to do whatever research they do, and they're going to name an entity or entities. Those entities that they name are going to need to respond. But that doesn't mean that those entities are responsible for that claim. When we get the research in, if it turns out that it is one of those entities has been named incorrectly, it is not on their property, we look to have that entity moved from the claim through a motion of summary judgment or just kind of talking to the attorneys can get that done usually. But it all depends. So like when you look at the federation right now, I'm not sure, and you guys would have to correct me because I don't know these answers. If the federation has actual property it's responsible for, or is the federation just over other Wellington properties that would, they don't have any physical property, right? So I think that's where if they have physical property, then they need their own separate liability policy. If they don't have physical property, then you're looking at it like, oh, well, we could use directors and officers that just need a separate D&O, for example. Christy, I don't know if you know this because it's been going on with Jen.
I think what they're asking for is, because we're unable to find anywhere where the property delineation is, and Wellington Federation has property, so I think that's what Ken's looking for. He doesn't want to wait until a lawsuit to find out where our property.
No, fair enough. I wouldn't want to either. Yeah, I don't disagree with what he wants. I mean, I don't have that or like an ability to know where that's, unless Christy, we've got something you aren't aware of. We would normally go to Donald with it and be like, hey, what do you have on this? Right. Or through the association to try to figure it out. Cause it wouldn't be something we would just know. It would have to be provided to us of like, hey, these things are this, entity and these things are these entities. And then we go out and get the coverage.
But here, when I looked at our property survey for my building, the survey actually had the pool on our survey.
Wellington.
Some associations do.
No, but on my personal building survey,
Okay, so
it had that pool.
it's not correct, but I'm just telling Phil,
Yeah.
the Federation owns and manages 2 pools. Plus some property. in
The Federation runs and manages. Hang on one second. I got Jenica just walked in. They're talking about the Federation for one. You want to get on this? Can you? I mean, what just went down?
Yeah, we just.
But we didn't bind general liability. Or they already had that. Okay, can you just jump on real quick? All right, Jen's going to jump on real quick because she was involved in what we just put in. So they already had the liability policies in place. So that was fine. It was the directors and officers.
Right.
Yeah. So let her tell you real quick. She'll be on in 2 seconds because that was the
faster.
yeah. Because again, she was just doing this. So let me just shoot her the link real fast. Sorry, guys, and that way she can just tell you. So again, I don't. All right, she'll join and then answer that question. I just want to make sure we're all on the same page and she'll know the answer. I just didn't want to talk to her through this without you hearing her. I figured it's easier for her to be on.
No problem.
All right. Hey, Jen. So just to bring you up to speed, there was a question about the Wellington Federation. And I know we just put some of the insurance coverages in place, but there was a question about whether there was a bodily injury at like one of the pools that they owned. And you said they already had the liability in place. I don't know if you just want to pick that up from there and just update what the Federation has so they're on the same page.
Yeah, so all of the amenity associations, so not just the Federation, but also Oxford, Plymouth doesn't have a separate one. They all have general liability coverage that's under the main named associations of Century Village policies. That's where their general liability, their property, and their umbrella coverage are. The amenities associations did not have coverage separately for their boards for directors and officers, crime, or workers' compensation. That was something that they never had when we took it over. What we've done in the past few weeks for the Wellington Federation only is we've put into place directors and officers coverage for that board and workers' compensation coverage to cover any of their volunteers if they were to get hurt. And then this morning we received the bind order for their individual crime coverage as well.
Perfect. All right. So that makes a lot of sense. Just to make sure we're on the same page. That's the part I didn't know. So we already had the Federation included in the master program. So when you asked the question about someone slipping and falling at the pool or something like that, that's fine. You've got all that already. What was added recently was just the directors and officers, the crime, and the workers' comp, because that had just never been put in place ever for the Federation. And so that's what was just done, if that makes sense to the group.
Why do we need workers' comp?
So the reason that everybody purchases workers' comp, and it's common for every condo in Florida to get it, is that there's a gap in the insurance program in the event, I'm just going to throw it out there, but let's say the Federation hires a pool contractor to clean the pool, and that pool contractor slips, falls, cracks their head open, falls in the pool, some bad injury occurs. That pool contractors do work comp benefits, and they should have their own work comp coverage, which is checked by the association or management company before they work on the property. but anyone knows that people will show proof of coverage and then it cancels for non-payment of premium, or any number of ways it turns out that that worker is uninsured. The hospital is still going to come after for their money for medical payments. That individual is going to be due indemnity payments. It's a very liberal law in Florida, so they're going to come after those work comp benefits. If you don't have work comp coverage, the general liability policy is going to deny that claim because they were a paid worker of the association. They were hired, right? They're not just a third party random person that fell. So in that scenario, they would need, that's how that work comp coverage would play in. It would pick that up. Also, volunteers would be picked up as well. I see Jenica's texting me stuff, but you're going to have to just say that, Jen, because I'm not looking at both things.
No, it's okay. The whole question about the coverage, I guess, came up because there was somebody from Wellington Federation who was standing on a ladder, maybe some sort of step stool, painting something at the pool house recently. And so,
Yeah, I remember that.
yeah. So that's what sparked everything with the Federation.
Thank you.
Yeah, so you're good to go, it sounds like, on the Federation. There's nothing else we can even sell them, Jen, if we wanted to.
Okay,
Renew
Yeah.
motion to adjourn.
yeah, I'll entertain a motion to adjourn for a second time.
Renew it.
All right, yes.
Second it.
All right, thank you.
You are very welcome. Thank you guys for your time. Anything else, let us know.
No problem.